We'll try and go a little faster. Okay. State whether the following items are included or excluded in the GDP. State whether these things are included or excluded. That's what they ask. Right. So where did my slide go? Why can't I edit? Okay. Okay. Tell me, guys. A housewife grows vegetables in her home garden during the current year, and the entire harvest is used for home consumption. Do we include this? Do we not include this? What can you say? This is included. This is a productive economic activity. Therefore, it's included. Where is it included? It's included under. It's included under because these are goods produced. Goods produced by what? Goods produced by households for their own consumption. So goods produced by households for their own consumption is included in GDP. So we include. First one is included. Second one, a retired worker receives a pension from the government. Do we include this or not include? What about this? This is not included. Why is it not included? Because this is a transfer payment. Remember, we talked about pensions and all. These are transfers, money that you're just getting unilateral. So no productive economic activity is taking place. So we can't include. Third one, a motor vehicle dealer earns a commission for selling a second-hand car. So what about this commission? Do we include this or do we not include this commission that this guy is earning? The commission that this person is earning will be included, but the value of the car being sold, no. Now, for example, I buy the car for 2 million, right? I display it, I put an ad on Ikman and I sell it at 2.1 million. That 0.1 million commission is included, but that 2 million worth of the car, we can't include that because that becomes a second-hand transaction. Okay, so you can say this is included because this is a productive service offered by the motor vehicle dealer. That's his job, buying and selling cars, right? Then the last one, a mother helps her daughter to learn a lesson in mathematics at home. Let's say your mother is teaching you maths. Do we include it? Not included because these are services provided by households for themselves, even though they are productive activities. Due to the inability of measuring the value of this, we don't include. Now, how are you going to put a number? Your mother is teaching you maths at home. How are you going to put a number? This is 1,000, 2,000, 3,000. You can't put. So because of that reason, that is not included. Is that okay, guys? Fine. Step. Yeah. Okay. Right. Guys, give me 1 second. This one is stuck a little. On. Let me open this. Okay, now it's right. This question is done. We'll move to the next. Assume you have been given the following reason for the part is the reason for first one is it's a productive economic activity, goods produced by households for themselves. So goods provided by households, produced by households for self-consumption is included in GDP because it's a productive economic activity. Now for this, you can calculate a value. For example, let's say if I grow my own vegetables, you can at least compare and see what is the price of those vegetables that is selling in the market. Let's say I have produced 1 kilo of chilies. So how much is 1 kilo of chili in the market? So you can include that, but services you can't. Okay. Next one. Assume you have been given the following data for a hypothetical economy. Okay. Calculate GDP. Gross domestic fixed capital formation, private consumption, net primary income, government purchase, change in stock, exports, imports, net taxes on production. Right. Can you quickly tell me which approach? Which approach is this? expenditure approach. How do we calculate? We know now. Private consumption, 3,000. So gross investment or gross domestic capital formation will include gross domestic fixed capital formation. It will include changes in stock. It will include what else? Is there changes in value? No, right? So then gross domestic fixed capital formation in our question is a 800. Changes in stock is how much? In our question, they have said a minus 50, right? Then how much is my gross domestic capital formation value? If this is this and this is this. So my gross domestic capital formation will be how much, guys? It will be a 750, right? This is 750. How did the 750 come? This 800 then minus 50. Then you have government purchases. How much is that? That's a 900. If you add all of this, you get GDE. How much is GDE? 3,900, 4,650. So GDE, if you add exports, if you minus imports, you get GDP. So how much is that? Exports are 450. Imports are how much? Imports are 600. So you need to minus that 600 and then you can get GDP. How much is that? What's the number, guys, for GDP? 4,500. 4,500. So do we take net primary income from abroad? Do we take net taxes on production? Yes, no? Net taxes on production, net primary income from abroad? No. Net primary income you could have taken if you're calculating GNI. Taxes you don't take under the expenditure approach because it's already inside. Okay, we'll go to the next. What are the limitations of GDP as a measure of people's living standard of an economy? So think, guys, what are the limitations? Now, just because the GDP, by looking at the GDP of a country, can you judge the living standard of that country? So they're asking you for the limitation. So what are the limitations? You can give one limitation. The GDP does not take into account the leisure time and happiness of people, right? It doesn't consider any of that. So it doesn't consider how much of free time you have, doesn't consider how stressful your life is, right? None of that is there in GDP, you know. So that is one limitation. Then you can also say GDP takes into account, right? Takes into account all, let's say, demerit goods and even illegal activities. Right now, for example, inside your GDP, there can be, you know, for example, these illegal activities, if they have found information, or the sales of cigarettes and all, sales of alcohol, all of that is there. So that is increasing your GDP. Just because of that, can you say your living standard and all is good? No, right? Then you can also talk about GDP does not take into account exactly the impact on the environment. Okay, so I'll take this. Okay, does not take into account the impacts of production and environment. Now, something like China might have a very big GDP, but if you look at the environment in China, it's so bad. They are the biggest polluter in the world. They're releasing so much of gas, so much of now. This is the same thing even in India, guys. In places like Delhi and, you know, all of that, there's so much of pollution, you can't see the sky. Now, recently my friend also went to India, and that's what he said, right? He said Sri Lanka is 1,000 times better because You can't see the sky. There is like a layer of what? Let's say mist or something. It's not really mist. It's all the pollution, the polluted air. It's physically there. And so you can't directly see the sky like you can see it in Sri Lanka. So that's the amount of pollution that they have in those countries. Okay. And right. So you can also say non-consideration of quality. Good. So even in GDP, they don't take into consideration the quality of the good. What does GDP look at? GDP looks at the price and the quantity. That's how price into quantity, right? That's there. So you can again, okay, educational, you can put here. Does not take into account leisure time, education, and all of that is not taken. So those are limitations of the GDP as a measure of people's living. This housewives thing you can include, but since they are not asking just for the limitations of GDP, they're asking for the limitations of GDP as a measure of people's living standard. So therefore, I will say not put that, but you can also say there are many productive activities, such as the services of households, right? We'll not just say the housewives one, services of households for themselves not being included. So you can give in a few points like that. Is that okay, guys? Yep. Questions, problems, issues? Okay. We'll move to the next. Explain the following terms. Okay, value added, I'm not going to explain. We did it 2 papers before. That part is done. Okay. Inventory investment. This was also there in a previous paper where we talked about, remember, changes in inventory. That is what you call inventory investment. So inventory investment is the changes in inventory. So how much of money you have used to produce certain goods, but they have not been sold yet. So those are considered as inventory investment. You have produced, but not yet sold. That's what you call inventory investment. Now, for 2 marks. Okay, what can you tell about these two, guys? We haven't discussed these two yet. GDP deflator and non-produced, non-financial assets. What can you say? Okay, we'll start off with GDP deflator. There is a question that we will have in the future also about the GDP deflator and the difference of that with the National Consumer Price Index. We'll do that later. So what can I tell about the GDP deflator, guys? GDP deflator. Okay, so GDP deflator, guys, is a measure. Now, I'll give you a nice example. Now, some of you all might ask, so isn't GDP deflator and the National Consumer Price Index the same? Right? Now, have you seen now remember in the past, like I taught you all the new features of the National Consumer 2021 base year. In that, can you see the amount of goods and services that are covered in that? Can anyone look and give me a number? I can't remember the exact number. The number of goods and services in the basket. There is a number like that. Not the collection centers or anything. The amount of goods and services that's there in the basket. Can't remember how much. Should be there, right? Just check. In your fast track month 3, unit 7, part. Just check, right? So if you take that, if you take something like the National Consumer Price Index, it doesn't take all the goods and services into account. There is a selected amount of goods and services. But if you take something like a GDP deflator measures the price level, right? The GDP deflator, a GDP deflator measures the price level of all the goods and services. You're taking the entire GDP, okay? 485 items, no? The National Consumer Price Index only covers 485 items. Now, do you think in the whole country there is only 485 items? There must be around 30, 40 vegetables, another 20 fruits, right? If you go, even if you go to Cargill's, you will see more than 485 items. There is yogurt, there is this, there is this. So next time you go to Cargill's, just count and see. So if you take the whole country, there's definitely more than 485 items. So National Consumer Price Index covers only that 485 items. But if you take something like a GDP deflator, guys, it covers, right? It, or you can say measures the price level, or you can say is a measure of inflation. You can say measures the price level of all final goods and services, of all the final goods and services in the economy. That's one thing that you have to definitely highlight when you talk about the GDP deflator. And then after that, you can say, how do you calculate this GDP deflator, guys? So GDP deflator is what? Is your nominal GDP or your GDP at current prices divided by your real GDP. That is GDP at constant prices. So GDP at current prices divided by GDP at constant prices into 100 will give you your GDP deflator. That is enough, guys, for 2 marks. For 2 marks, you don't have to write 2 marks. Give the definition, talk about how to calculate that. Is that okay? Fine. Step. Geographical area. Geographical area, so even deflator is for the entire country. Even National Consumer Price Index is for the entire country. So geographical area is not a big concern. Okay. Then this one, guys, what can you tell about this? Non-produced, non-financial assets. We learned this in unit number 10, but they have put it here in unit number this one. What can you tell about this? Remember examples I gave you. Examples like goodwill, copyrights, patents, right? So these are all non-produced, non-financial assets. Now, what are financial assets? Shares, treasury bills, debentures, they are financial assets. What are produced assets? Things, machinery, buildings, furniture, they are produced assets. So what is non-produced, non-financial? So non-produced, non-financial, you have things like this. Yes, you can say ratio between constant prices and current price. Yes, correct. So how do you define this case? Now, these are just examples. How are you going to define or give a small answer? For this, what can we say, guys? So you can say, right? So you can say that these assets have not been produced. Go with the word itself. You can say these are the assets that have not been produced, that have not been produced within geographical boundaries. So inside your country, or anywhere, okay, you have not produced these goods. That is this. But these can be used, or these can aid in the production process. For example, your goodwill, right? If you have a copyright on something, so those kind of things, it can aid in your production process. Okay, so that have not been produced within geographical boundaries, and it can aid in your production process as well. What else can you say, guys? So these can even include these guys. It can even include this things like monetary, these environmental things. For example, you can even take stuff like land and all also you can take. No, it's not that it doesn't have a monetary value, right? It's not that it doesn't have a monetary value. It does have a monetary value, right? But it's not a monetary asset. It's not something like shares or debentures. Now you can even take things like land under this. Okay, is that fine, guys? None produced, none financed. So it has not been produced also. It's not a financial asset also. So it's mainly things like this, right? Land, goodwill, copyrights, patents, all of that. Is that okay? Shape. So only for 2 marks, guys, you don't have to write a lot. Yeah, fine. We'll talk about this when we come to unit number 10 also. For now, we'll just let it go there. Then unit number 10. Okay, right. So that is it with the 2018 paper. Then. Part of gross domestic capital formulas. Yeah, that is where ideally you can put it. No? So any goodwill, copyrights and stuff. Yeah, you can say. Then, okay, so this was the 2018 one. First one, whether it's included or excluded. Second one, the calculation. Third one, limitations. Fourth one is the explaining the following terms.